Hello, this is Dave, and welcome to Equities Story. I'm with Wolf, and again, we've got a number of announcements to go through today. So just obviously remember, this is just a general share advice and not personal advice. And Wolf, we're going to go through obviously a number of stories that have been announced today, and we'll see if they hold. We'll see if there's a possibility we can make money from these. And I think what I'd like to do is start with AIM. So the reason I want to start with this is that the price action is up 14%. It's a hot stock, another win for the hot stocks in a really tough climate to pick anything that's hot, because it's sort of everything's, hot. If it's hot, it's not hot for long. Does that make any sense?
No, it doesn't matter. It never make any sense, but everyone understands you somehow.
My mum understands me anyway. So Wolf, the question is, right, I bought it as a hot stock. It's up 14%. I've got resistance at 49. I've got a chance to lift my stop. I get it, right? But am I holding this? Fundamentally still cheap. Fundamentally, it's a great announcement today. Google validates the technology. Google's not going to pick a second-rate captioning service. So great contract win, right? 5 million over 3 years. That's going to add to the revenues, of course. It had a little small black mark. Remember when they come up released it and they just missed that their own guidance by 200,000, which the mark went bloody hell. However, you can forgive them about that now, and say to yourself, still super cheap. If they can grow 10%, just give it 10% because it's a profitable, or at least cash flow positive company. If they can grow by 10%, surely at these prices, it's still got that 50 cents in it. All right. Well said. It's a hold. Well done, Wolf. Next off the cap is DRR. Yep. Which is Deterra. What's it called? Deterra. Yep. Why all the French name? Is that French? I don't know. Of land, Deterra of land is Latin, isn't it? There you go. See, mate, if you speak, si puede hablar español, entiende todo. Okay, Wolf. So, what do you make of the announcement? Is this a? Can you bring up the announcement actually while I quickly talk about it? So we need to go through some of these. We'll talk about it briefly, but some of it we just need to have a look at it because we just want to see the latest information, such as the dividend, right? And you've got a total full year dividend of 33.76. I'm going to work this out for you guys straight away to see where they stand at, right? Dividend wise. So we've got 376 times 100. And I tell you what, remember this story is all about royalties, right? Nothing else, royalties. So all about commodity prices because it's about profits for the companies. That's how they're going to get their dividends. So if you're looking for a dividend play in a normal commodity space, you're going to be okay with it. In a cycle which is going down, then you're probably going to see the dividends maybe come off, right, over time. Interesting story for sure, Dave, and much safer than anything else out there in this space because it's all just, it's all about the profits. So the question is, can you make a case for it as a dividend play? All right, let's go. Let's see what it is at the moment. So the price of it is $4.60. So let me just work this out. 7.33 dividend deal, Dave. I think that's pretty good enough, right? Even if it comes off, so maybe I can hold it for say, I don't know, 6 to 12 months, maybe. But again, it all depends how far, where do you see that the commodities in 12 months? Do you see BHP, for example, producing another great result in 2023? It's an interesting dilemma. But if you're a believer in the industry and the industry's holding up, it's a decent dividend play. Yeah, absolutely. I mean, when you pay 7.33, say for example the profits come off 20%, 30%, right? Presumably the dividend comes off at 30%. You're still probably sitting on about 5% yield on that. All right, thank you very much. Right? Okay, so a decent dividend play. For sure. Next one off the list is AMC. That actually, the chart's pretty good, Wolf. It's holding up. It's just struggling a little bit to go any higher. Is the announcement sort of
going to push them higher? And here it is, or is it just going to keep it in that range, do you think?
I think, look, it's okay. I actually preferred Aurora's announcement. So we'll go through Aurora in a sec, but I preferred their announcement than Amcor's, but they're both doing fairly well in a toughish market where there's probably a quite significant pressure on costs for companies like this. So overall, decent. I'm probably thinking profit switching to Aurora.
Okay, I love that. So if you're in AMC,
Yep.
not a bad result, but take a profit and
I'll tell you the reason why I'd probably do that. It is just more expensive than Aurora. So it's got PE of 21 by the looks of things here, and a dividend of about 3.5. So let's jump to Aurora because let's compare it together straight away.
Okay,
right?
okay. Bear with me. Now you put me out of my sync. I was so
I know
happy.
you're doing so well, but Dave, I think maybe it'll be easier for listeners to just have a look at
Yeah,
comparison.
no, of course. So,
So I'll really quickly about Aurora. So Aurora is actually trading on 16 times, right? So a little bit cheaper than AMC. The results were actually better. And I like the fact that they're positioning themselves for a little bit, maybe even more growth than AMC. The dividend roughly about the same. So, like I said, and I actually like the chart here better than I like the other one, but I'll leave that to you to talk about. Fundamentally, Dave, I prefer this over AMC.
Okay, now, not everyone's obviously got AMC.
Mm-hmm.
So if I haven't got AMC, I'm looking at the chart here.
Mm-hmm.
Is this a buy, fundamentally?
For me, I'm thinking defensive, good result, not a bad outlook. Yes.
Right. And for me, I'm looking at this chart and I'm thinking, well, it's on the good candle breakup. I think I'd like to see it end the week around just over that 355. And then if it could do that, Wolf, technically we're in for a buy. How does that sound?
I like that. I like that a lot. Good. Okay. That makes sense. So that's one we can maybe with AIM, two really good holds if you've got them, or a buy. Let's keep going.
Next one, we've got TLX, which, again, technically a very normal chart, exhaustion pattern, Wolf, a lot of noise up here. There's your resistance, bang, down it goes. It's obviously just run too hard. Now, let's go over the fundamentals and talk about the other side of the story.
Okay, because it's turned commercial, right? So it's one of these products that's commercial. You can see the revenue jump from 2 million or 2.9 million to about 24 million. I'm starting to take it a little bit more seriously. So I'm starting to look at through what they actually do. Is it, I'm always looking for the next CSL type scenario in this healthcare space.
I know you are, because you sold CSL at $4.
I know, and I've been looking for 30 years ever since.
And it's lived with you all your life. That's why you don't sleep at night.
Exactly.
And is this going to be the one that eventually makes you sleep? Could you die a happy man with this one?
It's got a good chance, and I'll tell you why. It is addressing a big problem. It's got there. So it is basically what it is. It is targeting radiation, molecular targeted radiation. So as MPRs, as they say. So it's high tech delivering markers where they can actually test for either deliver the actual medicine for getting better, right? For health reasons, or delivering markers to test for diseases, so or sickness or illnesses. So it's an interesting company with technology that now it's being validated. So I'm looking a little bit more for detail. I'm only just scratching the surface at the moment.
Wolf, explain for the sort of people like me, like the layman out there, exactly what they do.
All right. So there's if you go to there's a beautiful example of exactly what it, much harder to explain than you look at a little picture, right? Go onto the Telix Pharma website and go into our technology, and it's just a perfect example of exactly what they do. So show it to everyone so we can see, and then we can start from there, right? And like I said, it is addressing a pretty interesting spot. So go to the technology, go go up to the top and
Technology.
Yep, technology, click on that. And there you go. See that picture, just go down. Yeah, there you go. What is MTR? And you've got a little picture. So they're targeting cancer cells, right? Targeting agents, a linker, and a payload. So it's all very difficult to penetrate cancer cells by the look of things. So they've got technology where they can actually get in there and either find the cancers very simply or deliver the drugs to fight the cancers, right? In a nutshell. So, you know, you've got already validation of the technology going commercial in America. And here you go. I suppose it's something that we need to probably know about a bit more about. It's probably still going to be, you know, way beyond our meager knowledge of this space, but as long as we get the concept of what they do, grab our head around how big the market is, what they're actually targeting, and you know, they're looking at prostate cancer, renal, and all the big issues, health issues that we have, right?
All the big cancers.
Yeah,
like,
exactly, Dave. So for me, this could be big, and that's why it's already $2 billion. And you know, obviously, people got in way early because they love the story. But as us investors, we need to see commercialization of this, and they've finally done that. Now it's going up, cranking up quite significantly. This is the time for us to have a look at this properly. Is this the story that's going to be the next CSL for us? That's what I'm going to find out for you guys. Anyway, at the moment, of course,
you're certainly getting me excited with it, Wolf. But okay, the chart isn't a buy, but you know what? If it can come back down to trend,
yep. That's right. I think that's exactly right, Dave. I think it's a good time for me to have a look at it quickly, so we can see it come back to the trend line. Maybe that's the time to get in.
Yeah, it'd be good to talk to some doctors who are using this.
I know. Just to give us a bit more of a yes or no. But you know, it is gaining traction in America. That's the beauty about it, right? I mean, from 2 million to 20 million in revenues, that's a pretty big jump.
Yeah, it's very good. It's sort of listed around $1. I mean, you know, what's it trading now? So $6. Yeah. Okay. Thank you, Wolf. So looking forward to hearing that. The next one we've got on the list is the little wine player, Treasury Wines, TWE.
Yep.
And I'm going to bring the announcement over, Wolf, so you can talk us through it. Oh, it's up a little bit.
Yeah, look, look, if you can look at through that, right? EBITs grew by 3%. You know, there was slight improvements. EPS up 4%. Not bad in a pretty difficult market for them, right? Where they've got obviously China not playing ball. So you've got to give them some positivity. You know, is it a company for us? No, it is still expensive at 38 times. So for us, it's a pass, but not bad. Not bad.
Yeah, it's
at least you can with that sort of result, you can comfortably trade it if there is a trade in it.
Yeah, what they've done very well over the years, where they were very reliant on China, which was a bit of an issue for us. They managed to sort of, I don't know if there's a little chart here anyway, they've managed to spread a lot of their sales now between America,
Europe,
and de-risk themselves a lot.
Yep.
And you know what, I used to laugh a little bit when you used to go on about the risk of obviously just China on its own. But you know what, Wolf, you see it in story after story after story, don't you? Companies that are reliant on China.
I think the big sales happen in Wolverhampton, Dave. There would be people were buying the bottles of wine to use as Molotov cocktails.
Yeah, that's true. At least it's a progressive society. At least they're spending money. Wolf, MPL.
Yes. All right, let's look at that one.
Okay, nice chart, but obviously had a good move up. You know, this has been on Einstein's. Obviously, the last few weeks it's done well. We picked the trend. Unfortunately, good price action this week. But Wolf, you know, when you look at the chart, you think we're up against a little bit of resistance here. So the question is, and there's a $1 million question, is that announcement good enough to
bring it up? Let's bring it up, and I'll quickly go through the dividends while you've got that up.
Can it break through?
Okay. Again, I'm probably sitting in the middle here with MPL. I'm not a big fan because it is highly regulated space. they can only raise their premiums by whatever the government probably much says, gives them permission by. So I don't like that stuff where you are at the mercy of your federal government, maybe in a way. However, they've been going quite well, right? So you got to give them credit there. They're not too expensive, 22 times, 5% yield. So there is that point of view from fundamentals, you're looking all right. But overall, I mean, if you look at that, go slightly go up a little bit. Look, it's like the little bit there. Financial, go down. What is versus financial? Keep going down a little bit. Financial data. Yeah, financial summary, right? Group NPAT down 10%. Group ROE for 12%. Neither here or there. Like, it's mixed with results. I'm not a huge fan. I think might struggle to get through that resistance, Dave, just on what I see today. And like I said, it's not my favorite story, but it may be a good little dividend play if you like it at 5.5%.
Right, and that's gross. So,
yep.
Okay. All right. Thank you very much for that, Wolf. And again, technically, obviously, a lot of resistance, and most probably will. I think it'll struggle to get through that 360 level.
Okay.
Interesting one. BLX, little lighting company, Wolf. Obviously sold off with the idea the markets, with life, we're going to get recession, times are going to get tougher. It's having a nice little move back up. Most probably all ready to go back down in the next fall in September, but the chart, you've got to like it. Now, talk us through the announcement and
bring it up, and I'll quickly tell you why I think it's going. Well, it's doing okay, and the reason is it's actually pretty inexpensive. While, and probably I'd say the other thing is because it's inexpensive, the expectations were high for the results. And I think, when you look at retail as a whole, you'd think it's probably going to struggle, but it hasn't, right? It's come up with a revenue up 5.5%. You got a profit up 8%. That's decent in this market. So it's trading on 12 times, yield of almost 6, Dave. That's probably the reason why the market's it's possibly saying, yes, we don't mind you. Beacon.
It's a little bit solid.
Yep.
Yeah, but I mean,
a tough market, they've come up with a decent result.
Okay, well done. I suppose the danger is that, like you said, we talked about, they are going to be talk about switching off our lights. But so
that's right. So
why will we need?
We might be looking candles again.
Well, there is which is the company on the ASX that does candles?
Yeah, that's Dusk.
Yeah, DSK, right?
Yes, but I think they've gone backwards.
Have they gone to Dusk?
Yeah, I think so.
Well, they've had a little bit of move up, but yeah, not looking too good.
There's probably a shortage of candle wax.
Yeah, candles getting too expensive. All right, what are we going to do then if we got no candles, no lights?
Flint and Tinder.
Oh my gosh, I'm lucky I watched all those Bear Grylls.
You know how to do things.
Yeah, I do. I tell the kids I said, Dad, don't worry, I'm like Bear Grylls, but then I always end up burning myself or doing something terrible.
Just imagine that. Go on. What's the next one on the list?
We're going to do that one day, Wolf, on a survival. I think it'll be good for bonding, good bonding session. You'd be fine. You're fine though in the jungle. You spend every weekend.
Don't worry about the jungles. We've got so many stocks to go through. Let's go through the stocks. That must be all day for everyone.
Right. Okay.
BKL. Don't worry about the jungles. Jungles can wait.
Go on. Black Horse.
All right. It's too expensive. It's simple as that, Dave. 12.8% revenue growth. Underlying profit, gross profit 15, EBIT up 19. Underlying 22%. So look, as you progress along, you can see the margins increasing. That's what it's showing you. Statutory NPAT up 30%, so up 7%. Look, it's not bad. So they're back to the growth again, which is nice. But at 50 times, it's just too much, I think.
It is expensive, isn't it?
Yeah, and I'm not a believer in the vitamins market, unfortunately, Dave.
It's become a lot more competitive.
Yeah, it definitely as well. 100%.
All right, that's going to be awkward, isn't it? One of the guys is he's high up. He's in the same soccer team as my kid, and I'm going to have to tell him his company's too expensive, mate.
I think he probably knows.
Yeah. Yeah, too expensive, mate.
And Wolfie doesn't believe in your products.
Yeah, no, they are. The products are excellent, Wolf.
I just
Black
don't. I'm not a big fan of the vitamin industry for some reason, Dave. I don't
Well,
know.
that's
Something
well,
about-
maybe that's why you never grew and you're only 4'2".
maybe.
Well, if you'd had your vitamins, you'd be fine. Now,
Read it,
next-
4'2". Go on.
okay, next one is Rick.
Mm-hmm.
So again, being very nervous about this, obviously with foot and mouth around, but
Yep.
it's delivered and the market's applauded. I actually stuck it on Einstein's because I thought it looked good, and
Mhm.
it actually wasn't far off a buy signal, let's be honest.
Yeah.
And bang, up it goes.
Oh, yeah. Brilliant result. I mean, look, when you look at the fundamentals here, Dave, at the moment, 16 times, 3.5% yield. If you forget about the foot and mouth and maybe the conditions and everything else out there, this is flying, still going pretty well. So you got to give them credit again. It's not expensive, good dividend to boot.
And a buyback.
Mm.
What
Look at that. Look at that. Look at the net profit, 70%, 16% EBIT. Sorry, yeah, I think up 16% EBITDA. So all in all, I mean, pretty good results. Looking all right, isn't it? You can't argue with that.
So,
Actually, can you bring up the Rick and let's have a look at the outlook? I mean, I'd be interested to say what they say, if they say anything about the thing. I actually didn't quite catch it when I was flicking through a lot of this announcement this morning.
I think the outlook most probably could be on their presentation. So if you
go on. So let's
if you bear with me, I'm gonna walk through here. See if we can find the outlook. And Wolf, you have to look for a lot of stuff, don't you?
Yeah, you do.
And the first thing you do is look for that outlook.
Yeah, I know. It's normally it's like the last page of everything. So keep going, our strategy. So they do have a plan, right? FY23 to FY25 plan, which is nice. And it's something that you've got to give them again credit for having a long-term plans, because not a lot of companies do that. They're just ad hoc stuff. Anyway.
Here we go. Look, there you've got the growth platform. Obviously, they've got a very, I suppose that outlook is that platform.
Mm-hmm.
Increasing sales,
grow earnings and cash flow in the year ahead by increasing sales and support the growth of existing customers and win market share. All right. They didn't actually give you a monetary update or outlook by the looks of things. So look, overall, they are going well. Next. Would you, if you're in it, I suppose, that's the question. Maybe $2 would be your price target here, Dave. Would you say that?
Yeah, I mean, from a technical point of view, it doesn't move too far from trend. So, if it has a run up to 220, I think it goes through to, I think maybe 220 Wolf. You take a profit and buy it back near the trend, or if you like the story, just hold it.
Okay,
it's on the way up. Next one, DTL, and again, technically, why get up the report? Wolf, it's had a run. It's starting to look a little bit tired. It looks again like it could come back down to trend, and especially obviously believing that this market's going to start getting tough from possibly even next week, Wolf. So let's have a look at the performance anyway. Yeah,
look, DTL has come up with a pretty good result. I've got to give them that. And I've been giving a lot of them to these companies. They are doing better than I think a lot of investors predicted or a lot of funds predicted. So again, I think there's an overlying theme for me that the companies are navigating through a very difficult inflationary market quite well, passing out a lot of the costs back to customers. As we can see, Dave, with inflation in the UK at over 10% now. It's like back to the 70s we go, or early 80s.
Yeah, it's a real worry. It's going to be interesting to see where our inflation is, isn't it?
Yeah, absolutely. But anyway, they deliver pretty well, 19%, I think, growth. The only thing for me, Dave, at these prices, it's too expensive, 35 times. So a little bit. If I'm going to be buying this, I want to buy it at 550, not at 650.
Yeah, I'm gonna take profits on it.
I agree.
And the dividend isn't that big enough to hold anyway.
No.
So IPH, Wolf.
Yep.
Really great move, up 16%. Let's bring over those results.
Go on.
What's strong result? EBITDA up 11%. That's all nice. So What's driving the share price through the roof?
Just go down slightly lower, just with that highlights, so we can see the actual revenue, EBITDA, and the profit line. There we go. So we've got change revenue 6%. This is I think, a fairly good result for an IPH with no acquisitions, right? Where it should grow probably up to that 10%. So I think they've outperformed themselves on that front, because they've got a NPAT of 14%. This is on the underlying results, of course, we've got to have to look at. So pretty good. It's more of for me, a dividend story with a little bit of growth, right? And I think the dividend's around 4% odd. So not outlandish, but decent. But today's move is definitely on that announcement of an acquisition out of Canada, which they're paying over 300 million for. So this is not small. This is something decent, Dave. That's a big chunk. And market's looking growth. Excellent. Thank you. We'll take it.
And they've got the money in the bank to pay for this, or they're going to be raising?
Well, let's have a look. Is there another? There's another announcement regarding that acquisition. Let's have a look what it says. Because this is just about the actual result. So if you've got that other announcement on the acquisition, we'll have a quick look through it, so you can see exactly what they say on the acquisition front. But like I said, I think for me overall, yes, I think buying Smart and Bigger, which is not interesting name, isn't it? All right, keep going down. Go to that where they've got that acquisition information. So we'll probably find out. Here we go. Smart and Bigger highlights. Expected underlying EPS accretion of approximately 10% in full year. That's a big plus for shareholders, right? That's why they're cheering it. So that sounds like they're not paying too much. Otherwise, it'd probably be neutral in a way. So transaction summary here, Dave, you've got record revenue. We're talking about 96 million. Now, this is, just keep going down. I just want to see what they're actually paying out of their cash or debt. They've got a number one position, which is very, very good, Dave. So look, all in all, I think it looks very, very decent from that point of view. And I can't see if they're actually paying out of their consideration. Upfront, there we go. Upfront cash consideration. Whoa, that's pretty good. So there you go. 387 million Australian dollars. 10 times pro forma adjusted Smart and Bigger EBITDA, which is decent. And I think I've seen companies being, at the moment, paid 12, 13, 14 times EBITDA. So this looks okay.
Here you go, funding. Here you go, Wolf.
Okay.
So there's amended debt facilities.
Yep. I suppose, Dave, the beautiful thing is this business is fairly predictable in its cash flows with IP stuff. So they can have, debt on their books quite comfortably with paying such a thing. As long as they don't, go crazy on it, then they'll be okay.
Yeah, I mean, well, they obviously do really well. They do the patents for products all around the world, don't they?
Yeah. That's right.
But I mean, if the market comes off, I mean, it would slow down.
Of course.
Yeah.
I mean, it's still linked to global economies, but it is fairly resilient in a way, right? You still have to pay for your patents. Just because you've got a weak year, it doesn't mean, I'm not going to pay for my patents. And there goes, opposition buying the patents out.
Yeah, it's got great recurring revenue, right?
Yeah, exactly. So they should have fairly sticky customers.
But they won't. But I'm talking about getting new patents in.
Maybe like that. Absolutely. Maybe you've got that thing, but I suppose
because you only pay for a patent once, Wolf.
You do. But you don't stop research and R&D, I suppose, in a way.
Yeah, but you don't. Right? Yeah, but you don't pay for it every year.
No, but that's for new patents, of course. But I suppose when you look at companies on a general terms, they're not going to completely shut down their R&D, right? So they still will probably work on some stuff. So there'll probably be a slowdown, but it's not going to be like that's it, it's over. Business. It's not. I don't mind it at all.
Wolfie, ORG, you didn't like it, and you'd think Origin you'd be pretty good, wouldn't you, in the environment that they've been working at the moment? Yeah.
Look, it's just not working very well. I mean, look at the results. Just go down here. Look at that. You've got loss at 1.4 billion. So at least that's improvements from the previous year. Well done.
It's a bit of a worry losing. I mean, what's the reason for losing money in this environment?
I think a lot of write-downs, Dave, because it's a statutory profit, so it includes the one-offs in there as well. So underlying profit increased, so maybe you can cheer that in a way, right? If there is no write-down,
even so, underlying profit was only it wasn't even up 100 million in this market.
No, it wasn't. But remember, it's not just a oil and gas company. It does have a retail electricity business as well, right? So it's more problematic. It's not a pure play like a Santos where, your profits will increase 300% just on oil price.
I know, but you think there'd be more than 5%, wouldn't you?
You think. So, that's why I suppose maybe the market's not that enamored with it. And I think maybe they're expecting more and maybe a bit of a better outlook, but it is. I guess it's not an easy market for them.
You know what? If it looks like that by the end,
business.
If it looks like that by the end of the week, it's got a sell signal on it. It's not good. Wolf, HPI, bring across a dividend play.
Yep.
Pays back.
Well, steady as she goes. For me, I didn't see anything wrong with it. Nice dividend, 6.5%. It's still a keeper as a dividend play.
All right, we'll just leave it there. I mean, do you want me to bring in? Do you want to have a look?
No, we can keep going with that one.
MGH.
Good results. Reiterated the guidance. I like the story, Dave, but it is very acquisitive. So a lot of this growth has been through acquisitions. If you look at the actual numbers on it, it's maybe touch expensive at 30 times and a small dividend. So, I think it's just finding its feet because it's only been listed since 2021. It's still finding its feet where the market's prepared to pay for this. Dave, I've got time for it, but, I'm not in it at the moment with fund-wise, but, okay company.
Yeah, well, we're not interested technically. Obviously, NXL. Yeah, it's just horrendously
dog.
weak.
Just a confirmation that it's still a dog, Dave, with the announcement. That's what I just wanted to say. Do not touch this. The results are still poor.
I mean, we picked CDA perfectly, right? So I said, it's had a nice run up. You got resistance around here. It can't go on with it now. If it look, I don't like that.
Very tough. I have to say, market's very tough. The results are actually very good and within expectations. And I think I had a look at Macquarie's what they said. It's pretty much exactly what they've said. They've hit. So I don't know what else they can do except maybe come up with a better outlook. I mean, that's the only thing here that's hitting it. And they've said that's the actual business for its metal detecting business. It's looking softish, right? And that makes up now 52%, which is a good thing because remember, it used to be the bulk of it was metal detecting business. Now it's 52% versus 48% for the communication side of things. So I'm glad that they're moving down and expanding and being a bit more diversified. But on the positive side, so on the negative side is the metal detection business a little bit soft. The positive is it's a strong growth for, they're saying in their announcement, strong growth for the communication business. So I still think, they should deliver a decent result, but maybe not as good as this year. So maybe that's what the market's saying here. Right now, you're not going up. You might come back to that $7 again, which is, Dave, like I said, for a long-term investor like me, I'm okay with it. I'm not too bad because the dividends are right. It's not too expensive. So, I think they might surprise on the upside later on anyway down the track.
Well, they're saying the Minelab sales in the first half of FY 23 may not reach the level achieved in FY 22. So the Minelabs, they say revenue is going down.
Yeah, that's what I'm just said. That's the detecting business, right? The Minelab.
Yeah.
However, the second half, maybe they accelerate with new products that's going out, right? So that's the weakness on there. The positive side is the communications. So the question is, do you want to be in this? Do you want to sell this? For the long term, as you probably hold. For the short to medium terms, maybe there's a better story now with maybe no growth to come over the next 6 months.
PME, Wolf. So again, PME, it's not doing too badly today, but it just can't get over that 55. So technically, it's had a run. Technically, it's a sell. Fundamentally, are you getting excited on this announcement?
44% growth, excellent. 148 PE, too much. That's my only issue. If this was trading at 50 times on a 44% growth, I'd be lapping this up. but it isn't. It's triple that.
So it's a buy on weakness, really.
Yeah. Oh, look, I think you've got to now. You've sort of come back to 40. I think he needs to come back to 40 again.
All right. CMP.
Mm-hmm.
It's not a story we often talk about, Wolf.
Right, it's a new one I'm going to have a look at.
So far away.
Bring out the actual numbers because we want to have a look at this. Is a little small company, but it's actually profitable. So I'm going to have a look at to see what they do, and I like the fact that they're improving. And looks like what's actually happening here is maybe they've turned a corner in a way. So it could be a contrarian play. So you can see revenues from shipped and invoice sales were 37.8 million, right, up 6%. EBITDA improved to 3.3 from 2.6, and NPAT improved. So it's a small NPAT earner at the moment, but you can see what's going on is there's more growth to come later down the track. So I need to have a look at this to see if there is any possibility that this business can improve further and maybe, see where it might take us, because the market cap's only 43 million, Dave, and you've got 37 million in revenue. So there's something there for us to at least go over.
Yeah, well, I think you just got to do more technically, right? I mean, this is when we want to buy it, when it's doing something like that. So too hard for us at the moment, technically, Wolf. ASX.
Okay.
So sideways.
Pass. Yeah, too expensive.
We love
good enough.
But we love the ASX.
Oh, best company ever.
Best company ever. Best company. We, very, very lovely people. Wolf, lovely people there, mate. We love you. ASX, we love you. But we're not buying, sorry, at the moment. PTL.
Mm-hmm.
I don't think this was on your list, but it's just sideways, Wolf.
No, it was. I had a look at it. Revenue down, but profit up. They've done well to extract a good profit out of our falling revenues, Dave. So they must have done something well, either cut costs or have a product that's gone quite well for them. Overall, remember, we had this one as a little play, as a little dividend play, right?
Well, it's 7%.
Yeah, and I think it still is. 9 times PE. I've got it's grossed up at 10%, Dave. So you still got that dividend that's pretty good. So it's a hold with those results.
And with some profit growth. That's it. It's excellent. So I think we'll put.
But you want to see the top line growth though, because I know how much can they extract out of a falling revenue number.
Maybe there's no one left in the office.
Maybe they've fired everyone. There's only one person left.
Yeah. All right. Okay. Last one. AQZ.
That's
sort of finding a little bit of support, Wolf. Here.
Yes.
What's
the ACCC says no. They're having concerns, of course, right? Qantas taking over AQZ's, ACCC having concerns, especially they've got concerns from other competitors saying, hang on a second, guys. If Qantas buys AQZ, that's going to make them even bigger. And there's going to be only one competitor left. They can't do that. So, yeah, I don't think it's going to go through.
All right. Listen, Wolf, just sum it up. Thank you very, very much. That was a really good look through a lot of stories there. So there's a lot of stories that possibly people are in. We've told you if you should be in them, sell them or get out. And there was one story in there which we're thinking there wasn't one buy at the moment in there. Sorry. Aura. Okay, yeah, your Aura. As long as it does a little bit more by the end of the week.
Yeah, yes. So we've got to wait till Friday, right? I mean, that's only a day left. And look, it's already coming back. This market is not helping today. So let's just wait till tomorrow. So really nothing outstanding today. However, we're watching Aurora as a possible play.
Yeah, if you can get over that.
And I'm looking into Helix and I'm looking into CMP as possible, maybe something new to play with.
Wolf, how's your little gold play doing? MEK? Yeah, it's just looking all right, holding in there, isn't it?
Not bad. I mean, gold is sort of weakening off, right, at the moment. Again. So, I suppose we just need to see more results out of these guys. Let's see. Let's fingers crossed that they're going to come up with some good results.
Yeah, and I think that you got the dial down last night, and the Fed just talking about they see interest rates increasing. So they keep flipping. They keep flipping from one sentiment to the other, week in, week out. One, this week they're they're all going, no, it's going to, the interest rates are going up. Next week they see the market get a little bit jittery and they go, oh, we're not so sure. It's the worst Fed they've had for a long time.
I think it's the pace of what they're flipping around, Dave. I think it's should we move it by 1% or should we just move it by 0.25%? And from one set of results to the next, they keep flipping their minds. But I think at the moment, the consensus is 0.5 is as strong as they're going to go over the next few periods. So I think we know that's going to go up, right? I think they still need to push it higher. How far? I suppose that's open to debate. But I think the consensus about the pace of it is going to be like they're not going to move it by 0.75 again. 0.5 is the most.
On that note, Wolf, thank you very much. Excellent advice, and look forward. We got live tomorrow, so yes. 12 o'clock tomorrow live. If you've got any questions,
early advertising. Nice, I like it.
Yeah, well, if you've got any stories that you're not interested in or you're unsure. And the other thing is we do have the CTM. It is on Saturday, Cincinnati event. If you want to learn the magic of charting, the magic of and a bit of Wolf's magic, little bit of Wolf's magical fundamentals, join us. And if you want to come to the Cincinnati event, please send an email to Karen. That's KERRIN, Karen at equitiestory.com.au, and she'll change your life.
No, it will change your life.
All right, see you, Wolfie.
See you guys.
Yeah, bye.